Hello, my friends. So last week we talked about dollar yen, and I shared with you why I think it would probably head lower, given the bearish sentiment in the market. And true enough, right, this week it traded lower. But before, right, you think that Rainer, man, is so accurate with his predictions, man, he's the real deal, blah blah blah. I'm here to tell you that any honest trader would want you to know that they are right half the time and they're wrong on the other half the time. So do not think that just because I nailed this correctly does not mean that I'll never be wrong, because that couldn't be further from the truth. If you have been following me for over the last few months, you know that I am wrong basically almost half the time. I'm right maybe half the time. And the only difference is that when I'm wrong, I just cut off the trade. And if I'm right, I try to write the move. And this is basically it, right? There is no way I can predict with 100% certainty, right? All I can do is just share with you my analysis, walk you through, if I'm wrong, where I'll look to get out, and if I'm right, how I look to, hold on to the trade. And that basically sums up what I do. So yeah, back to this week's market analysis, right? This is what I'm going to do. Walk you through the dollar yen trade which I'm in, as well as, share with you something important, right? Because I'm sure a lot of you trade off horizontal support and resistance on your chart. But sometimes when the market is trending so strongly, these levels on your chart doesn't seem to be, get retested by the markets, and you miss mega move in the market. So I'm going to walk you through and tell you what you can actually do about it in order to, hop on board trends in the market. So with that, right, all this and more in this week's market analysis. I'll see you there. Okie dokie. So first up, let's talk about dollar yen, right? This is the same market that we started off last week as well. So the dollar yen as of right now is, it's clearly showing signs, of, trading towards the downside. We talk about this potential head and shoulders pattern over here on a weekly time frame. This is the neckline. And on top of it, right, I mentioned why I was actually bearish because of this sentiment in the market. You saw this spike over here. This was when the BOJ introduced negative interest rate. So technically, when this kind of piece of news happen in the market, it should propel dollar yen higher. That's what we've seen over here. But the interesting thing is that over the next 3 days, right, the market has clearly erased whatever gains that that caused that caused the market to trade higher. So this is telling you that the sentiment of the market is clearly towards the downside. Because if a piece of news that is supposed to move a market higher could not make it go higher, and instead, right, within a few days, all the gains are erased, it's telling you a very clear message that the sentiment is towards the downside. So that's it, right? How I traded this was that on a weekly time frame, this was the neckline that I talked about. On the 4-hour time frame, when price broke below this neckline over here, right, this brown or yellow line you call it, when it broke below it, right, I was looking for a setup to get short, and the setup came in the form of a continuation pattern. This could be a flag pattern, a pennant pattern, whatever you call it. I don't think it's really important to nail down the exact pattern, but rather to understand that this is a potential continuation towards the downside. So what I did is I placed a sell stop order below this swing low, stops of 2 ATR, and my trade got triggered, right? So it went in my favor, and now it started trading against me. So that's it, right? I noticed one thing is that the 20 period moving average, which is this red line over here, the 20 period moving average, this is the 50, right? The 20 is currently acting as dynamic resistance. So it makes sense, right, for me to trail my stop loss based on this 20 period moving average. So that's it. If price were to break and close above the 20 period moving average, I'll just exit with whatever profits I have. But if price, decides to, respect the 20 period moving average and look to trade lower, I'll hold on to this trade and, possibly even scale in depending on how much the market go in my favor. So yep, this is my plan right now for the dollar yen. This was how I went short, and I believe I talked about this last week as well, about how I intend to get short, right? Looking for a continuation pattern to trade towards the downside, and true enough, right, this did happen this week for me to get on board the trade, right? I know in hindsight it looks easy, but I believe last week I did talk about it. So fortunate for me, right, this was the pattern that I took it, and as of right now it's still looking okay, but we'll see how it goes, right? Whether the 20 period moving average will will it hold or will it break. That is something that I can't predict. So that's why my stops are in place. If I'm wrong, or I'll say if the market proved me wrong, just get out of your trade. There is nothing personal. Okay, so that's it. I want to move on and talk about this market. Where is this? Aha, this one. This is the 5-year US bond, right? One thing interesting is you notice, right? This is that the market tends to respect this area of resistance very strongly, right? It came up over here and then it sell all the way back down. Then it came up over here once again, sell all the way back down. And then this time around, look, came up all the way up and it potentially seems to be heading lower once again. So I think this is a potential, a swing trade for swing traders to get short the 5-year bond, right? Because you see, if you go short, say on Monday somewhere here, your stops above this high, there is a potential for the market to swing back all the way lower near the lows over here, which is an area of support. So this 5-year bond caught my attention because, price came up into such a, key area of resistance over here, right? Which is this one over here. So the 5-year bond is something to look for as well, right, in the coming week. That's it. I want to talk about the dollar Mexican. So the dollar Mexican, right? Let me get rid of this moving averages first. So the market has been bullish for quite a while. So I want to highlight out a problem that I see a lot of traders face, right? Because they are so focused on what traders talk about price action trading, right? Trading without indicators, because indicators lag, right? You just need lines so you can see the price clearer, because price action trading doesn't lag. Well, I'm not saying that is wrong, but if you look at this market, right, a lot of traders, what they do is this. They plot out their support and resistance line. For example, this, right, area of resistance, right? So price break above it. I'll wait for price to retest it before I get long. Well, in this instance, clearly it did retest it. So what are you going to do next? When price breaks out of the next area of swing high of resistance, they wait for another retest to get long. Well, in this instance, it didn't retest. And they draw another one over here. All right, if price breaks above this area of resistance, they wait for retest before they get long. So while waiting for the retest, they wait and wait and wait. They have missed almost how many pips is this? 5,000 pip move, because they're waiting for a retest of their previous resistance turn support. Well, you have to understand this, right? Sometimes the market respect this level to the pip, and sometimes when it is trending so strongly, it couldn't really care less about the levels that you have drawn on your chart. And in fact, if you are just waiting and waiting for these levels to be hit, then as you can see, right, over the last 2-3 years, you missed a 5,000 pip move. So now I just want you to think, right, and ask yourself this question: how can I get on board this trend if clearly, as of right now, the market is not respecting the lines that I've drawn? Right? How can you get on board this trend? So you need to get your creative juices thinking, right? Don't just think everything at face value, because if you really follow something without really thinking through it, right, you will face certain problems in your trading that other traders will not tell you what are the problems. So I'm going to tell you that this is a problem that is faced by a lot of traders. They just draw their lines hoping for price to retest the previous resistance turn support, maybe give them a bullish candlestick pattern like a pin bar or engulfing pattern before they get long. And in this instance, right, you miss a 5,000 pip move because of waiting for such a trading setup. Again, I'm not saying it's wrong, but when the market is trending strongly, you have to find other means to get on board the trend. And now, this is something that I want to highlight out to you. What you can do is, again, bring out your moving average. So recall the people who tell you say moving average are lagging and their indicators are useless. Well, in this instance, if you get your 20-period moving average, the red line over here, you notice that there was quite a few opportunities to get long, right? This retest over here, this one over here, this one over here, this one over here. All just by having a simple moving average like the 20-period moving average. And this provides opportunity for you to get on board the trend. So now the key thing that I want you to think about is that there is no right or wrong, right? I won't say price action trading is king. I won't say indicators are the holy grail. But rather, you have to understand the structure of the markets and know how to use your tools effectively. Okay? Because if you only have a hammer in your hand, then every problem that you see will look like a nail problem. Right? Where sometimes, you shouldn't be using a hammer. Sometimes you maybe use a screwdriver. Sometimes you should be using maybe, your hands instead. So get more trading tools at your disposal and know when to use them. Right? There is really, I would say, it's very hard to grow as a trader if all you have is just one tool and you're just focusing on that one tool. And when the market requires a different set of tools, you don't have it at your disposal and you can't trade it. So my point being is, again, to understand the different tools out there as a trader that you can use and find the best few tools that makes the most sense to you and learn how to use them effectively. Do not condemn any certain trading tool until you really understand them inside out. And if you feel that this tool is something that does not fit your trading personality, does not fit your trading approach, then fine, you can abandon it altogether. But don't condemn certain trading approaches or tool without really understanding how it works. So that's it, right? I hope now there is something for you to think about, right? And again, right, it is not wrong to trade off support and resistance, but sometimes when the market is trending strongly, like this dollar Mexican chart that you're looking at right now, it is going to be difficult, right, to just get on board the trade just by this trading these horizontal lines. So this is where dynamic support and resistance could come into play to help you identify areas of value. Okay, so with that, right, we've come to the end of this week's market analysis. And if you have any questions, alright, any queries, don't hesitate to let me know in the comment section below. With that, I wish you good luck and good trading. I'll talk to you soon.